My savings account is funding my M1 account. So there is a portion of that that's being taken. It's like $20 a week or something like that. That's being taken and being put into M1. So that is working against me, kind of, sort of. But at the same time, the amount that I'm making in M1 is more than I would be making on a typical savings account. What's up, guys, and welcome back to YBI, where we discuss opinions and strategies on how to better your financial selves.
What it do?
What is good? What is good?
You know, got an exciting episode for everybody going on today.
What is that?
We're going over our portfolios again today. A little update on our portfolio growth and journey for this year for you all. So if you guys like this journey, want to keep it going with us and see what's going on with it, you got to hit that like button, hit the notification bell. And if you're on like Spotify, Apple Music, follow us to get updates from when we post new videos, and you'll know what's going on with us. Even with the audio versions of the podcast too, we do try to do a pretty good job of just saying what we got going on, just audio wise as well. But of course, if you all want to actually see the full portfolio, you can go on YouTube or go on the websites as well and check out more content there. Bam.
For sure. So, update episode. We have to do updates on the savings challenge, updates on M1 and our portfolios in general, and let you guys know exactly where those are. So if you have been following along with the last episode that we did about a month ago, you'll be able to see our progress and see what's really happened. So let's hop right in. Roman, you want to share your screen for your M1 profile?
I think we should talk about kind of, I guess, what happened in the market over the past month. What's been going on? It was March. We had NFTs really popping off, a lot of stuff with that, the semiconductors, that with the ship in the canal, a lot of things happening in March. Did it affect the market?
We had a massive dip. There was a massive dip in early March.
Yes.
Everybody's accounts were down at that point, and then what?
You actually started around that time though, right?
I started a little bit before that. It was like 2-3 days into actually having M1 set up when I just saw everything go down. And I was like, oh, this is great. It's going to be some great content. But no, everything is back up. Everything is, load off. So, yeah, everything is fine with my portfolio.
Nice. Okay, cool. I'm trying to think of any other like big news that happened in March. The markets are weird. They had the dip, but then they rebounded how they normally do, as most people do, and a lot of people were asking me, what I feel like the market was going to do and things like that. And I always tell people, one, I am not a professional financial advisor. So if you actually want to do something with your money, also before you do some major moves, seek professional financial advice. But as most cases go, usually by the time the quarters are kind of ending, the market has a slight correction, like it kind of adjusts when earnings come out and things like that, because you actually see how much money these companies made and whether or not it was accurate by their estimates, or if they were off, or if something affected them, like a ship getting stuck in a canal, whatever. Anything that might have happened, actually see those earnings reports and see how companies are actually performing. So I see the market. I've noticed the market usually corrects around that time, and it usually rebounds shortly afterwards, because also a lot of dividends payouts go out in around March, so that will lower the market a little bit, but then a rebound shortly after that as well. Just trends I've noticed.
Other big news in March: the Nets got LaMarcus Aldridge and Blake Griffin. It's got nothing to do with financial advice, but hey, NBA.
If somehow, if finance are in the sports world or sports marketing, it could be.
Yeah, or with that.
Or if you're into sports betting, which that's a gamble, I guess, so is stock market investing. But
I just like watching the games. So it was big news for me, as you're wearing a Chicago Bulls sweater. So basketball, yes. So are we going to start with M1, or do we want to start with the investment accounts? The savings account.
I guess I can be let's do savings first. A little intro there. So savings, I guess, are on track. Still doing that. I've actually been throwing more, like a little bit more extra savings that account just to pad it, because I wanted to use that account for paying off like student loans and such by the end of this year, and like the tax bills that I have coming up now. So that's the account's going to basically be saved up for that. So it's on track right now. still looking fine and dandy. What was that? I was doing $10 a day. I'm also have portion of my.
$10 a day.
Mm-hmm.
You weren't.
Yeah, I was at $10 a day, and I'm also doing the weekly one too, where you do like
$10 a day.
$10 a day.
Sounds all right.
$10 a day.
Okay, let's go with that.
And then I also was doing
mine 5 cents a day or something? Mine was
no.
5 cents.
Yours was supposed to be compounding, so yours would be 5 cents, then 10 cents, then 15 cents. Yeah. So mine is the $10 a day because when we did the math, it breaks down for the year. You save about the same amount of money overall, like by the end of the year. So we're comparing those. And then I'm also doing the weekly one where you do like $1 1 week, 2, 3, 4, whatever. Those are all on track, as well as with the just a portion of my paycheck goes directly to savings account and that gets saved up there. Haven't done anything with it yet. It's just sitting there collecting interest until I decide to pay off some debt with it. Side note, I also will have a CD ladder episode coming up for you guys. I spoiled it. I'm not gonna lie. I'm setting it up. It'll be done in a couple months.
What about you, Zion? Yeah, they're not gonna spoil that. They're not gonna remember. I'm not gonna remember. My savings plan is the same. My savings plan has been the same. I've been adding the money in there manually every week that I get paid, and then there's automatically money that gets transferred in there as well. My savings account is funding my M1 account. So there is a portion of that that's being taken. It's like $20 a week or something like that. That's being taken and being put into M1. So that is working against me, kind of, sort of. But at the same time, the amount that I'm making in M1 is more than I would be making on a typical savings account. So it's working for me, but that's why my numbers are a little bit skewed.
And, normally we would not really tell people to use savings for investing, but in this case, this is it's an extra savings account that we've kind of set up to do these savings challenges to show you all in a journey sense. So that way, using that money for investing is perfectly fine and still totals up to the same amount. Also, of course, saving up money to pay off debt. In the case, what I'm doing with that account is still fine too, because you paying off debt is an important step to financial freedom. So you want to make sure those things get done.
Absolutely. Right, so that's a clear little recap of the savings challenge, but let's hop into M1.
To the M1. Let me see, share my screen. All right, cool. So I already have it set to see my 1 month progress from this month already. Total returns about 4% up so far this past month. So that's pretty good. Earned about $15 in dividends, and then market gain shown there. You see the dip that was here and then the value that's grown over time since then. Throughout the entire month, I believe right in February or January, I did like a portion of the sell-off just to get some of my profits out and then start reallocating those. So I'm still putting those in there, but still overall up. And I think first time I showed this account was sitting right at 5K, and it's already at about 5,200. So it's growing, and it's growing at a good rate. So I'm happy with it. Nothing's really changed too much as far as my top performing sectors, consumer cyclicals, and what about materials? Not doing as good as it did last time. All right, consumer cyclicals, interesting. And worst one is communication, which is what's in there. Disney, Verizon, AT&T, and Viacom, which Viacom being down 30%, I am very surprised about. I'll actually do some research for you guys and figure out why that is. But usually Viacom performs pretty well, and they usually pay a pretty good dividend, so I'm fine with that either way. Yay.
All right. Share screen.
A brief look at mine.
Yeah. So the one that really matters is mine, because Roman's been doing this for a while, but everybody's following along with mine. I need the rights.
Oh yeah, that portfolio is only a year old.
But you put $5,000 into it. Yeah. So hey, I want people that are looking to just do. All right, here we go. So starting with $100. Again, this is pretty much the start. And then you see the dip, the same dip that Roman had here. And then we see the increase here. This is with me at...
Your dip is like at March 3rd.
This?
Yeah.
What is this? Oh, this is
That's
just
an
when I was adding
increase.
money.
Yeah, that's just when
This is
you're
just when I
adding
was adding
money.
money.
Yep. So your dip was March 3rd, but because you entered in the market at that time, yours wasn't as severe.
Yeah. So, but it went down a few dollars. Right here. And then we see more increase. I continue to put money into it. I continue to put money into it over time. Overall, we see the dividends here, and we see my market gains here, right?
So I'm comparing. So for
Um,
3% gain in that month.
yeah, about 3% gain.
Okay. Other one did about 4%. But that one's more conservative. That account's a little bit more conservative and not as aggressive. That one's more for like steady over time growth.
Mm-hmm.
Okay. All right.
So
That makes
things
about
that are
sense.
up.
Those tracks.
Charles Schwab is up.
Yeah, that's just their
Vanguard.
dividend equity ETF. So that's just their like, dividend equity ETF, whatever makes their, dividends from there. Very
Yeah,
easy,
these are.
very clear, Colt.
This is both down. Let's see what else is down. The Island Fund. And one's 28.
That's bonds and some stocks. So it's like, part bonds and part stocks, but bonds are kind of just bonds are going to sit usually around. They don't change much. They go down a little bit, they go up a little bit, but they pay out a steady rate. You really don't want them to go up or down really each way because they pay out a steady rate. That's more just going to make more money in time no matter what, because they're bonds, especially even though with the bond rates are starting to go back up. That's why, always set usually a long-term portfolios up with bonds because they're always a good long-term play and they have a lot less risk to them. And no matter what, even if the interest, the Fed cuts interest rates to zero, which has happened, and bond rates go really low, eventually they'll end up going back up again. So there's still a good long-term play, no matter what.
Yeah. This is actually a better picture of the month. So this is the one that compares to yours. Yeah. Yep. So here's your dip right here, and then add more money. So I'm going to be, so now you can see that for the month there was the gains here, and then there was the percent return here. So overall up at the end of the day. So did nothing, added a little bit of money here and there, made money. That's all that matters. So for everybody that's like, oh yeah, like I don't feel like I can do this, it's not really worth it. I made more money here than I did in my savings account. Yes, It went down, it dipped for a second, but this was literally like one day, as you can see. So we were over here at 127 and then went down to 125, was back up at 127 a day later, 127, and then a few days later, we're back up. So this is before I added money.
And yes, so I was like still that chart shows like his deposits too. So that's why like the big dips are going up at certain points, and that's okay. As your portfolio ends up having more overall just capital inside of it, like especially once you get like probably above like 1,000 in there, you're gonna end up seeing those like dips when you deposit money not be as big and be more like with the market. Like you won't see that have much of like a value over time, like big jump like that. But you'll definitely see it kind of towards the earlier stages of the portfolio, but it's okay. Like you'll still see like your actual return like ratio there, as you can see as Zion shows.
Yeah. So I think that's important to just make sure that you are continually giving your account a chance to survive. You're giving your account a chance to perform. And that's exactly what we wanted to do here. So this month I'll probably be changing some things because it looks like it didn't take effect in terms of putting in $20 a week. So I'm going to see what that does. Let's put in a little bit more every week and see what happens. So the next time that we do this in about a month, we'll be able to compare it to March, and we can compare March to April and see exactly what those changes look like and what adding just $10 more per month or per week will do for you. So
we also will have a special guest coming on soon. I'm gonna drop a bomb now too. I don't even know if Zion even knows about this yet. I got a special guest coming on who's gonna be start doing market takes and market analysis for us. So I'm hoping with our monthly updates, he can kind of give us like a overview of what some companies did and like some monthly like market kind of updates for us, and give us an in-depth like, look into the market. He is like a finance major. This is what he's doing, still in class now, but he's doing a lot of research and things at it, and he's going to help us bring us on and get more insight for someone who has an expert look at it.
Sounds good to me. So that is our breakdown of our savings challenge and an update on our M1 accounts, where we're going, what we're trying to do. For everybody that's following along with this, everybody that's attempting to do this, several people have reached out to me and just let me know, hey, this is working. Hey, I made this amount of money. I'm super excited about it. You guys can continue to reach out to us via email, Facebook, Instagram. We have our business number on our website, so you guys can reach out to us in several different ways. We would love to hear from you, and we will continue to converse with you all.
Let us know too, how your own portfolios are doing. We do have links to these portfolios down below if you want to copy these and just load these up to M1 or try out Stash or whatever. There's a couple links to Webull down below if you want to get free stocks there as well. But let us know. I'm also thinking about making like an actual like spreadsheet tracker for dividends, or just like overall portfolio tracking in general. So that's something that interests you all. Like, let us know. We want to hear from you all and see what you guys think. But we're happy to see you all go on your journey with us and keep it growing.
Absolutely. Well, that is going to effectively wrap it up for this episode. Stay tuned as to what is coming. As Roman let you guys know, we have a few things in the pipeline. We have a brand new collection of clothing dropping very soon. So keep in tune. It's gonna be a good time. It's gonna be a great time. I was gonna do that, but then I was like, probably not. But y'all know what it is. We may be young and we may even be broke, but we are always investing. Thank you guys so much. Till next time.
Peace. Hey everybody, thank you for listening to Young Broken Investing. We just want to let you know that these are the opinions of the hosts. They're not meant to be the basis of any security purchases or investments. We're trying to give a little information out there for everybody, and have fun and be safe.